Welcome to Under the Microscope. I'm your host, Jenny Germano. Thank you for joining me today. I am excited for this next episode. We are going to be talking about breaking through the challenges of banking for cannabis regulated businesses. A little bit about my background. I got my start in Denver, Colorado in 2009, working in vertically integrated cannabis operations. And in 2015, I founded my consulting firm, ICS Consulting, and I have been helping operators with operational readiness for the last 10 years across the United States. I would like to introduce my guests today. Erin O'Donnell and Michael Beird from Association for Cannabis Banking. Thank you guys for joining me today.
Thank you for having us. We're delighted to be here.
Thank you, Jenny.
Erin, why don't you start first and give a little bit about your background?
Thanks, Jenny. Mike and I both co-founded Bankers Hub, and we started that about 12 years ago, maybe 13 by now. And through Bankers Hub, we created education for bankers, certifications for bankers. And back in 2018, 2019, we started doing a lot of cannabis education for the banking industry. And that's when we created the Cannabis Banking Professional, the industry's first certification on cannabis banking. So that started at our company, Bankers Hub. And we decided that this industry, this cannabis banking industry, deserves its own association, deserves its own focus. And that's when we created the Association for Cannabis Banking. We've built out our certification since then. We've built out our education since then. And I don't want to steal all the thunder before Mike's turn, but we also wrote a book about cannabis banking that was released early this year. So we are all in on cannabis banking. We love this industry. We're here to support it. My background is more event management and education. I've been a professional event manager for over 30 years. And Mike's background, and he's up next, is more from the banking side.
You're up, Mike.
Thanks, Jenny. Thanks, Erin. From my perspective, as Erin mentioned, my background has been for over 40 years in the banking industry, both as in banking as a banker, branch manager, bank auditor for Bank of America, Shawmut Bank, and then equal amount of time spent consulting to banks here and in Europe and in Asia on everything compliance and workflow, largely focused on the retail bank. So when we started getting into the cannabis banking industry, when we were running Bankers Hub, we found that there was such an appetite for an unbiased perspective on educating banks and credit unions and others on the laws and the regulations supporting this, especially in the early days. I couldn't resist the opportunity to get into something that as bankers we see very seldom, which is a new industry grow. And also one where the large entities like Bank of America, like US Bank, Visa, MasterCard are sitting on the sidelines along with the major state associations. So from our perspective, for both as a banker and for Erin as a marketing person, a trainer, a person involved in events, this seemed like an ideal opportune time to take our knowledge, our contacts, and our perspective and bring it to something completely new. It seemed like too good of an opportunity to pass up.
I love what you guys are doing. I think the industry needs it. I'm so excited to do this episode because I think it's really important to bridge this gap between cannabis banking and cannabis operators. I think there's a lot of kind of mystery and frustration and people just not fully understanding, why do I have to do these things, or why are the banks making me doing this, or why is it challenging to get a bank account, or why do my bank accounts keep getting shut down, and so on. There's a lot of different things going on around cannabis banking. So I'm really hoping this can be really helpful for operators that are listening today. One of the questions I'm going to start with Mike first is, how do federal restrictions, like cannabis being a Schedule 1 drug, directly impact cannabis banking?
That's a great question, Jenny. I think we oftentimes assume everyone sort of understands who the players are and what the implications are in this industry. Many people have been asking about the rescheduling, what's it mean, and how restrictive are the federal guidelines? Well, the DEA and the federal agencies have come up with a classification system that they've had around for decades, where Schedule 1, 2, and 3, the primary scheduling categories that we're talking about today, represent the primary risks associated with certain drugs. So a Schedule 1 is considered the most severe. Those include things like heroin, LSD, and marijuana. I think most people today versus 50 years ago would look at that list and say that which one of these doesn't seem to really belong. And so there's been a push lately. So to reschedule or deschedule marijuana based on the medical research, based on all of the studies that have been done versus, let's say, heroin and other drugs that have limited, if any, application medically. Schedule 2 drugs, for example, would include those that are legal but have a tendency to be misused. So Adderall, Valium, things like that typically are Schedule 2 drugs. And then Schedule 3 are the drugs that we've all come to know from pharmaceuticals that we buy every day on prescriptions and things like that, antibiotics and what have you. So there's been a push to move these to Schedule 3 because Schedule 1, being that it's federally illegal at Schedule 1, really inhibits the growth of businesses being able to work within the construct that we have for businesses today. Access to the payment system, for example, has always confounded cannabis related businesses since day one. Once they can start to move that to Schedule 3, that's not a panacea, but it will reduce those federal restrictions that you mentioned, Jenny, and really start to open up research and start to open up at the markets, and the playing field gets level within the construct of this. So the federal restrictions are extremely critical and impact this directly. But with some lobbying efforts, with the public getting behind it, we're really hopeful that ideally that it can become a descheduled drug, but at a minimum, perhaps a Schedule 3 that will lift some of those restrictions. And as a result, bring a more inviting environment for banks and credit unions to participate in.
Erin, what type of financial institutions currently serve the cannabis industry right now?
The financial institutions that are serving the cannabis industry right now are credit unions and community banks for the most part. Credit unions, they have a sense of community. They feel obligated within their community, help businesses grow, help the community at large. So they're really investing that interest that they have in cannabis because they feel the need to create safer communities, to ensure that the businesses that they have in their residential jurisdiction are thriving. And then we've got community banks that also feel very similarly. We're not seeing a ton of big banks really joining right now. We believe that they're going to wait either for legislation such as Safer, or they could be possibly waiting for the entire federal legalization movement. So that's where we stand right now. We are seeing smaller community focused banks and credit unions banking the cannabis industry right now.
I wonder if how many more times we're just going to keep adding safer onto the Safer Banking Act,
Well,
because when
I,
I first started helping to lobby towards that in Washington D.C., it was the Safe Banking Act, and it just keeps evolving and evolving. I
and
hope,
never getting past.
and never getting anywhere, which is
Yeah.
really frustrating.
Though, Jenny, even the industry itself is wondering, why do we even care about safer at this point? Bankers have not gone to prison for banking cannabis. Now, if you're messing with BSA and you're messing with other regulations, that's another story, but nobody's going to prison or getting fined for just simply banking cannabis.
Yeah.
So, do safer really even matter? That's
hmm
a question that we ask ourselves all the time.
I'm glad you brought that up, because no one is really going to jail for banking cannabis businesses. And
No.
so it's just curious to why aren't the big banks getting in? And maybe they have more to lose.
Part of their portfolio, then you still have the high risk, but maybe not necessarily the high reward.
Yeah.
If you're a smaller institution, this is going to be a bigger part of your deposit portfolio and your lending portfolio. So you're going to have the risk, but it's going to make a bigger impact to your bottom line if you're a smaller institution.
It's interesting how the banking challenges and the scheduling challenge right now is driving who are the players in the industry, because I don't really think the big money has even come in yet.
Yeah. And I think Mike had a point too.
I was just going to follow up your comment, Jenny, that I think the major banks, and I was lucky enough or unlucky enough to have been around when interstate banking started to fall, the restrictions started to fall by the wayside. And Shawmut Bank, where I was running the distribution practice, was one of the first banks in the New England experiment that started doing interstate banking. And one of the advantages was we were able to create a single consolidated set of policies and procedures. And I think most banks today that are major interstate banks, whether we're talking US Bank or Wells Fargo, are stand on pretty much a consolidated set of policies and procedures that they can use across their network. When we introduce state by state legislation on something that is federally illegal, but is quasi legal from state to state, those banks that are in multiple states would have to then develop corresponding policies and procedures to accommodate this single industry to ensure that enhanced due diligence, beneficial ownership with the additional rules are being applied to this category of customers, but it would be different in states where it's illegal versus states where it's legal versus states where it's restricted. So I think a lot of these banks are staying on the sidelines until there can become more of a solid, singular set of policies or guidelines that can cut across all of the states.
Yeah.
Until then, I think it's going to be very difficult for major banks that are multi-state entities to really get into this in a very deep way.
I know you guys have given a lot of great examples, but is there anything else for why banking is so challenging for these regulated cannabis businesses? And I'm talking plant touching, marijuana. I know hemp and marijuana are two different things when it comes to maybe how a bank might look at somebody. And you're more than welcome to share, I guess, the differences, because I do know that some hemp companies don't get treated the same way a dispensary or a marijuana cultivation or marijuana manufacturing facility.
Because of the Farm Bill, there's actually more regulation in hemp. And part of the reason why it's so challenging, Jenny, is because bankers want guidance. Bankers want a regulatory agency to tell them what they're looking for. And they don't have that right now. Everybody's learning together. The regulators, the auditors, the banks, they're learning all of this together and working together on it. And we have made a lot of strides in the last 10 years. But I think it's a challenge just because banks themselves don't have a clear path and they have to invent it. And everybody's doing it a little differently. So it's just, overall, it's just a challenge. And I know Mike definitely has something to add as well.
And really, there's two questions in there, Jenny, and I think is really on a broad basis, even for banks and credit unions that are in states where cannabis has been fully legalized. We're still seeing the hesitancy and the restrictions of those institutions getting into this for a variety of reasons, not the least of with reputational risk. It's not good enough to say everyone's doing it like our kids used to tell us, but mom, everybody's doing it.
Yeah.
Banks pitching this upwards to your board of directors, trying to get them to sign on to something that right now is still a question mark. As Erin said, the foundation on which this is built is still rather shaky. The Cole memo, which was issued back in 2014, was rescinded by Jeff Sessions. And as a result, everyone's knocking on wood saying, yeah, we're going along with the guidelines from FinCEN, but for a lot of institutions, that's not good enough. And so I think that for businesses in states where it is fully legal, they're still finding that they're, like here in New Mexico, there's only two institutions that bank it. And those institutions announced a merger last year. So
Wow.
we're going to be down to one. So you start to get a sense of banks have always been risk averse. So asking them to jump in as a whole into this industry is going to take some time. I think the other question you asked was about hemp. And we actually did a
Yeah.
webinar on this yesterday talking about intoxicating hemp and focused a lot on what we're seeing in the news today with Texas passing SB3. That's going to pretty much outlaw hemp for all intents and purposes. And the reason that's important is marijuana with its THC component, that's the psychoactive component, is a natural organic derivative of cannabinoids. But they've found that using hemp, which also contains that, can be synthesized artificially to create a synthetic form of THC, which skirts around what Erin had mentioned, the Farm Bill. It's a loophole within the Farm Bill. And we're finding states like Texas and others are trying to get a handle on this because that's an unregulated piece within
Yeah.
this, just to add more confusion and risk to what we're talking about. So you bring up two really good points. And I think until the government starts to provide the guidelines, a lot of banks are going to stay on the sidelines.
Those are some really good points. And you mentioned FinCEN, which is my next question for you. I think a lot of cannabis operators might not even understand the FinCEN guidelines and, why that banks are following these guidelines.
The guidelines were set up, and again, sadly, they're guidelines. They're not laws, they're not regulations. They're guidelines, which it's a lot of latitude to federal examiners. And we've been hearing stories on federal examiners in some states that have been very receptive and understanding of the desire to legally bank cannabis. And then there's stories of even in legal states where federal examiners are dead set against it. So these guidelines can be very confusing. Typically, if you're in compliance or if you're a banker and you have a BSA background, AML background, what it really is extra layers of protection and risk aversion associated with onboarding and vetting these cannabis related businesses or CRBs, enhanced due diligence as opposed to just customer due diligence. So you're going to look at beneficial ownership rules beyond just the owners. Where did they get their money from? And where did those people get their money from? All of this is to really take FinCEN and try to ensure that the money that's flowing into this, which is largely cash and largely untraceable, is still being received according to the guidelines of the government, which says if you suspect the deposit has its source in cannabis, you should file a suspicious activities report or SARs. The IRS has come back saying, help, we're drowning in SARs now on. But for banks to protect themselves, when you ask, why do banks care about these regulations? Because they know they're walking a fine line. It could go
Mhm.
either way on their next examination. Easier with state examinations. OCC and federal examiners have a slightly less open view of this. Banks are right to walk cautiously down this, but the ones that have been doing this successfully, Jenny, we find they took it seriously. They created a department. They've got CAM certified BSA AML specialists who are reviewing the transaction. It's no small investment, but
Yeah.
it's really to ensure that these regulations and the guidelines from FinCEN are being followed.
Yeah, and a lot of banks that I've talked to, they're like asking, "Hey, we want to make sure our CRB program is in compliance with these FinCEN guidelines." And so I think how you defined it as this extra layer of protection, that makes sense to me. So a CRB, now I know a lot of operators might not know about this, right? This is something I had to learn when I started working with cannabis banks is a CRB, which is a cannabis regulated business. That's what banks call cannabis operators who touch the plant. And a lot of banks, they create a CRB program. Why do banks create these programs?
I think that most banks know, certainly since 9/11, the Patriot Act, KYC, that institutions for the last 20 years have really needed to maintain a heightened sense of onboarding for all customers, no matter what industry they're in. Any money laundering, domestic and international terrorism threats are all driving a lot of what banks have been doing the last 20 years, which sometimes delays account opening and onboarding and things until they can get questions answered about the nature of the business that's coming. When you factor on top of that the federal illegality of cannabis, you've really just raised it because up until recently, the cartels and organized crime have all been in cannabis as well as fentanyl and opioids, other drugs. So the idea of loosening up the restrictions around these um, does concern federal regulators as well as state and local operators. So banks know that you've got to not just follow your regular due diligence and your regular vetting that you're supposed to be doing with all businesses, but because the nature of this business is one that tends to attract unsavory elements, they've got to take more seriously the restrictions around on cannabis businesses. And that means once you open the business, you can't just walk away. Part
Yeah.
of the guidelines, part of the rules is ongoing monitoring, Jenny. You've got to stay on top of it, presumably site visits, or at least ensuring that you've got eyes and ears on the ground at these businesses. Because if you open up a business when they tell you, oh, we're going to do 20, 30,000 a week in cash, and within 6 months they're suddenly bringing in 500,000, three-quarters of, and you're not paying attention to that, the regulators, I assure you, will. That's one of the major reasons that banks have to stay alert even after day one opening. And that's something that a lot of banks, even post 9/11, haven't probably done a great job doing in terms of keeping eyes on their businesses. But when it comes to cannabis, we're on a whole new level.
Gosh, such good information. And I have to say, 10 years I've been helping operators, consulting, and the question I get all the time from operators is why is my bank making me get a cannabis audit? They say, I understand getting a financial audit, right? I understand they want to know my taxes or my sales, but why are they making me have this third party person come in and do a cannabis regulatory audit of their facility, and then I have to turn in that audit to the bank? Why would the bank care about that?
Yeah. What, Mike, would you say that's KYC, know your customer?
I
Yeah.
think that's know your customer. I also would say it's not that unusual for bankers to have to look at it this way. Let's put it this way. I used to oversee flooring and car loans, auto lending at Bank of America. And one of the things we always had to do was audit the inventory of the dealers that we handled. So you get your list of VIN numbers. You'd need to make sure that they've been auditing. So if you show what they should have for inventory based on VIN numbers, that's part of the audit of any business that has an inventory that you're lending against or that you're simply maintaining a relationship with. In some respects, CRBs are not much different than that. They have an inventory. The inventory happens to be marijuana. It might also be concentrates, edibles, you name it. So doing these audits isn't just about the financial side of it. It's ensuring also that the financial side of it and the product side of it line up. So there's software out there now that does inventory tracking, communicates directly with the bank. And then the other side of it is, as we mentioned with hemp, bankers sadly have to become adept at also at least understanding chemical reports to ensure that if they're banking a commercial hemp producer, they're not allowing the level of THC to get over 0.3%. That's on the bank, because if you're doing this for your customer and this customer is bringing you this cash, you still have the responsibility for ensuring that they're following the regulations. And again, having third parties go out and audit it and do site visits or to ensure that is to either they need to do it or you need to do it as the banker. But there needs to be those audits conducted. And again, most businesses have audits. Grocery
Yeah.
stores, they do their January inventory because they have an audit coming, and that's how they reconcile their numbers. So really, it's a fantastic question, but I think a lot of times it's raised because a lot of dispensaries don't have that kind of retail background, and that maintaining and auditing their procedures, their policies, their inventory is just standard business procedure.
People come from other industries over to cannabis, and I think they've had businesses which the bank never came and audited them. That makes more sense to me why a lot of people are just like, I have no idea why they're coming in and doing this.
Stay
This makes
away.
no
Yeah.
sense. I think they feel targeted in a way,
Yeah.
actually.
That's unfortunate because banks and credit unions are really tied to BSA, Bank Secrecy Act, as Mike mentioned in the previous question. They really have enhanced due diligence because this is a high risk business. Part of the reason why it's a high risk business, it's cash intensive. So where are these products coming from? Where is this money coming from? What does it tie to? Banks need to understand that. So that's why it feels like they're getting picked on, but the banks and credit unions must adhere to the BSA. And part of that is enhanced due diligence. And part of that is know your customer. So
Yeah,
that's why they're doing it.
that's really helpful. This podcast is for operators, so this is good information that I don't think a lot of operators have this kind of detailed information about know your customer or understanding why am I getting audited, or they might not understand the FinCEN guidelines. I know we did tap a little bit into the different levels of risk. So, Erin, was there anything additional that you wanted to add about the different levels of risk for banks banking with cannabis businesses or hemp companies?
Sure. So a lot of what our banks and credit union members are facing is they have to decide if they're going to get into cannabis, how far are they going to go? Our friend Stephen Kemmerling from CRB Monitor came up with that tier 1, 2, and 3 system that ties to SARs that Mike had explained.
Yeah.
Some banks and credit unions will say, you know what, I'm just going for tier 2 and 3. It's less risk. It's not plant touching. So the risk goes down. It's not cash intensive. If I'm a light bulb supplier for a grow facility, I can charge my light bulbs off with credit cards. People don't have to pay cash for those things. It's less risky. So there are risks associated with those tiers. And banks that want to jump all the way in and just say, we're doing it, doing seed to sale, including seed, there are levels of risk that we break down from tier 1, 2, and 3.
I'm so glad you brought up the tiers because I was thinking about that. Can you just briefly explain to our listeners what these tiers are, these categories that banks put these businesses in?
Yeah, Steve had actually come up and he's actually cited in our book. We want to make sure he got the recognition for having developed that tiering system because it's an easy way of at least assigning kind of a red, yellow, green overview to cannabis businesses. So tier 1 is really plant touching businesses, your dispensaries, your labs, your growers. They're touching the plant and they're the highest risk because they are plant touching, because a lot of their inventory is tied up in equipment that probably couldn't be easily resold legally on the secondary market. So if there was a foreclosure, something like that, it's a lot more complicated. Whereas, as Erin said, tiers 2 and 3 are non-plant touching businesses. And the only real distinguishing factor between a tier 2 and a tier 3 is the degree of revenue coming in from cannabis related businesses. So if I'm a consulting firm and I've got a lot of other clients in other industries, I just happen to also consult in cannabis, I'm probably a tier 3. Less than 50% of my total revenue is derived out of the cannabis industry, whereas a tier 2 is going to have more than 50% and might be a little riskier. If cannabis goes upside down for that company, it may very well impact other lines of business that they're servicing. So banks have really embraced this tiering system as a way of distinguishing the level of risk. And so when banks are first getting into this, we often recommend to the banker to take a look at ancillary businesses like hydroponics, grow lighting, like things that aren't touching the plant and are
Like us.
like us.
Yeah, I think I am unfortunately a tier 1 because 100% of my business comes from plant touching
Yes.
companies.
If
Yeah.
your
Unfortunately.
revenue, if like 50% of your revenue is coming directly from CRBs, I think you would be considered, that's what a bank is going to look at too. Where's your revenue stream coming from? Ours comes from bankers and credit union and financial services industry. So we're considered actually not even a tier 3.
Yeah, it's very interesting to be in that category, and I do not touch the plant. Mike, what are the biggest compliance risks banks face when working with cannabis businesses?
That's a great question, Jenny. And it's also one I think that's important for dispensary owners and others to understand and appreciate the risk that the bank faces. Because oftentimes I think we go into a bank and we feel like we're being put upon. You have to bring all your paperwork in and all of that. And it feels like I'm the one taking the risk, not the bank.
Yeah.
But in reality, banks have a number of different risks that they're taking on that really distinguishes this from more traditional industries like auto lending, real estate, things like that. And a lot of it concerns with the illegality associated with this. So while I might be in a state that does allow cannabis banking, so opening up a checking account is okay, we need to remember cannabis businesses are still illegal at the federal level, which means they don't have access to federal bankruptcy protection. So if the business starts getting into trouble, they don't have the option to restructure their financials the way another business could through Chapter 11. So the bank needs to realize that they're somewhat exposed in terms of if this business starts to go south, my access to remedies aren't necessarily there. Plus, as I mentioned before, if I have to foreclose or that business is going to go into receivership, chances are a lot of what they own for inventory is stuff I can't deal with as a bank, largely weed and the equipment that goes with it. Banks that are starting to get into lending, where you do have even a higher degree of risk, are doing is starting from the real estate side. Because again, presuming that the dispensary might own the land that it's sitting on or might own the building that they're in, that's something physical that the bank could actually take on as what they call Oreo property or other real estate owned. So that's a major risk banks take on in working with businesses. And that's another reason why they should be vetting these businesses very carefully as who's investing in them. What's their marketing plan? What's their business plan? So that they have a sense that this business is going to be around longer than 6 months. And the others are, as I said, more esoteric, a reputational risk. So if you're in a community where maybe it's a dry county, maybe it's a community that doesn't have access to a lot of bars, they're more conservative, then the bank's going to have to figure out how to produce this in a way for the community that they'll embrace at the Chamber of Commerce, meetings with the public. But all of these are risks that the bank's going to face because it's not just about the cannabis business, Jenny. It's also about the other businesses where if people start to feel as though the bank's taking on businesses that the community's been fighting against, then other businesses, reputable businesses with that bank may also start to say, I'm going to go to the bank across the street.
Yeah.
They're not banking potheads. So a lot of these risks really have to be taken on by a champion within the bank. And I think you've probably seen, and we've worked with many of these, where the bank decides, okay, we're going to take on cannabis, but how do we manage and identify these risks? So they bring on people who actually like this business and they want the bank to be in this business. And they start to take on addressing those risks one by one with the senior team, the C-suite, local leaders, and things like that. But those are just a few of the risks the bank faces. And it's not just monetary. It really can affect the bank's standing within the community. And I think a lot of the banks, that's what's keeping them out of that until there's a more acceptable atmosphere, especially out of DC around cannabis. Some of these banks are going to look at that and say it's too much expense for too little return.
Yeah, I think a lot of times too, operators don't realize, but banks have compliance teams, like whole compliance departments.
Huge
I've
ones.
Huge ones. I've actually have been on calls where there's 5 or 6 people on the compliance team and they're expanding slowly into the cannabis industry where they might take on 7 or 10 cannabis operators at their bank and they're just taking baby steps. I wanted to get clarification on an acronym that you use in case our listeners don't know what SARS means.
Absolutely. So in the area of money laundering, there's two types of reports that banks are required to maintain with the IRS and with the and the other agencies. And one that many people know about called currency transaction reports, CTRs. Bankers love our three-letter acronyms. So currency
Yes.
transaction reports are the ones many customers have seen. If you bring in a level of cash, now typically it's $10,000 or more, but there's all kinds of rules around that. People try to learn all the rules to try to game the system and get around it. But these are actually reports that say this report's being filed with the government because the deposit or the transactional activity exceeds the thresholds that the government has set for this type of activity. A cash deposit, unless you're an exempt type of business, you deposit 20,000 into your account, whether you're an individual or a business, it's going to get filed with the government because they're going to want to know where the cash came from, what the nature of it is. For transactions that may not violate those levels, but might still be perceived as suspicious, that's where those SARs comes in, Jenny. A suspicious activity report says this doesn't exceed 10,000, it may only be 3,000. But the nature of the transaction is such that that it's suspicious enough that I'm going to go ahead and file it with the government, make them aware of it. Now, it's fairly rare outside of these types of industries, but sometimes if someone who has maintained a very low balance suddenly brings in a large sum of cash, a couple of thousand, the bank may go ahead and file a SARS, just pardon the three-letter acronym, CYA. A lot of SARs get filed for CYA.
Wow.
But in the cannabis business, the FinCEN guidelines basically said any transaction that has its source within the cannabis industry or peripheral has to have a SARS filed on it. And that's actually how they've come up with the estimated number of banks that are participating, which they've always put around 700 or 800. Most of us in the industry feel it's far less than that because every bank that files a SAR is not necessarily a bank that's banking cannabis. If you come into my bank and I have nothing to do with cannabis, but you happen to be an employee of a dispensary, I have to file a SAR on you and let them know that the source of this money is coming from an industry that is highly regulated. And a lot of dispensary operators and owners and employees take offense by this feeling as though it's Big Brother watching you. And we try to educate CRBs, as I know you do, on the fact that there are rules and guidelines. And if you're in this business, you got to play by these rules, and the bank has to play by them as well. So that's the nature of the SARs. They're not doing it to harass you or to abuse you. That is one of the things that they're trying to do to prevent bad money from coming into the industry.
I would say 2025, it has gotten a lot better. As somebody who operated these facilities in the early days, let me tell you, I saw some pretty shady stuff going on where you're only depositing $10,000 increments
Yeah.
a day to not
Yep.
get any red flags from the
Yep.
banks
Yeah.
that didn't know we were in the cannabis industry.
Mhm.
You couldn't go into a bank with your cannabis t-shirt on. If you're an employee, you worked at a grow, you couldn't go in smelling like you'd been trimming all day to risk your payroll. And then also too, this is really crazy, but one of the dispensaries I was working at, the owner made us spray all the money with Febreze. This is no joke. We sprayed all the money, all the cash with Febreze, and then we had one of those food sealers, and we had to food seal the money in the
Mm.
bags, and then we could put it into the safe because the cannabis was in the safe, and it made the money smell like
Yep.
cannabis. And when he would go into the bank, the money smelled. And then one day he took the money in. Why does your money smell like air freshener? And this was in 2012 that we were doing
Wow.
this. And then I had another owner that I was working for who was depositing all his nightly deposits through the ATM machine to avoid going to the bank.
Wow. Yeah.
Yeah. That we have tried to educate bank dispensaries to some extent. We did a webinar a few weeks ago on high risk businesses, heavy intent, cash intensive, high risk businesses, and solutions that banks have used for moving money from point A to point B. Dual pouch disposable night bags are a great solution, which we've been trying to educate them on. That got introduced into the banking industry back in the late 90s. But the nice thing is, you don't even have to use a food sealer in these particular bags. When you seal the cash up, it can't be opened again without there being a tamper evident. So if you try to reopen where the cash is, it's obvious that someone has gotten in there. And then there's a second pouch that holds paperwork, the deposit slip, maybe a listing of what makes up the cash. And no one has to open that until it gets to the vault or wherever it's going. So if it goes to the bank in a dual pouch bag, I can't say that they won't smell anything, but they can also take the word that what's listed on the outside of the bag is what's inside. No one else has tampered with that until someone had put that into the bag. So again, it's some of the challenges that banks and CRBs have to get over, and really dialogue and working with each other is the key to this. Is you just have to talk and explain things. And I think if they can explain to CRBs why they're doing this and why this is important, I think they'll go along with it. They'll feel as though, okay, I get it.
There was one time that I had to deposit $3,000 cash. I got paid in cash by a client, and it smelled like marijuana, and I was
Uh-huh.
very nervous. And I walked into Wells Fargo, and as she was running it through the money machine, I could smell the cannabis as I was standing at the teller window, and I thought, "Oh my God, this is it. This is it. Wells Fargo
This
is
is the
gonna they
moment
are gonna
that the
shut
bank
me
turns on
down."
me. Yeah.
It's unbelievable. I don't bank with Wells Fargo anymore for my business account, but,
And that's interesting
anyways,
because Wells
yeah.
Fargo doesn't bank cannabis.
Cannabis.
So if you went to a bank that banks cannabis or a credit union that banks cannabis, it might not be that odd for them because they have clients that are already bringing in cash. But to go to a bank, especially a big bank like that, yeah, I'd be nervous too.
I've been very fortunate and I've never had a bank account shut down.
That's great.
Mike, maybe you can help me with this is why is banking so expensive? Some of these places are charging some outrageous fees for these cannabis operators. Not everyone.
Yeah, I think that, and we saw this in the early days, Jenny. I know you saw it there, where banks, it was reported they were charging $1,000, $1,500 a month as a standard checking account fee for these businesses, when 6, 8, $10 might be a standard for any other industry, probably more for a business. But I think a lot of the reason for it, some of it's legitimate. A lot of what we've been talking about, we spoke with a bank a few years back that was getting into it. They wanted to get into it nationally despite only having a couple of branches in their bank. So they had to go out and hire 8 CAM certified compliance people because they were going to go nationally and they wanted a ratio of how many accounts they were going to have to how many compliance officers. But for a bank with 2 branches, to
Yeah.
have to hire on 8 compliance officers is no small investment. So part of what they're trying to do is offset their startup costs with the higher fees. I think the real solution, and we've been talking about this a lot in recent months, is with other industries, typical process for bankers is I bring in a lending business and the deposits will follow. Loans are the primary way that banks make the money. In today's environment where the cost of funds is low, 3, 4%, the cash itself doesn't carry a lot of value to the bank. It has to be handled, it has to be stored, it has to be Febrezed.
Yes,
That
it
adds up.
does.
But no, and the cash itself doesn't have much earning power. Back in the 80s and 90s, when interest rates, mortgages were at 15, 16, 17%, the overnight market was at 13, 14%. They could make a lot of money with this cash. Today, until banks get into the lending side, this is not going to be a big money maker for a lot of banks. Once they get in lending, now I can start to charge rates that reflect the risk and what have you. But today they're trying to get and absorb that risk expense through the deposit fees. It's really the only way they have to do it. And for that, the CRBs still don't get access to treasury management services, cash management. They don't get access to the wire desk. They don't get access to. So they're paying high fees, but they're only getting a fraction of the services and products that are offered to other businesses. So I think we're starting to see an equilibrium established. I'm hearing that a lot more banks are getting down into the more normal business schedule of fees than they would otherwise. But you're absolutely right. It's been expensive. And until we start to get some consistency in the industry, it's probably going to behoove these businesses to continue to shop around, not just in their area, but nationally, because a lot of banks are getting into this nationally. They're coming up with solutions for money transport, things like that. And that's going to also drive down the cost.
Yeah, I'm hearing from my clients that they can't deposit the money themselves. It does get picked up by an armored truck. They're not allowed to handle the money going to the bank, that they have to use the armored truck services as part of the
Right.
account. And some banks are also charging per license, which I think frustrates operators. Is that normal for businesses? Do they charge per location? But why would they charge per license? What if they have different licenses at one location? Why would they be charging by licenses?
I don't know in latter instance, Jenny, why they would be charging on multiple licenses within a single facility. I think the fact that some may be charging per facility, and if the facility itself has a single license, that would make sense. I think I'd hate to say it's to make money, but it's to offset their costs. If I've got a dispensary business that has 20 locations, now I've got to have my branches or my main cash vault service those 20 locations versus 10 locations versus 5. So there is a variable aspect to the cost basis for the banks to have to deal with. So I could see why they might be pricing this out on a per location basis. Per
Oh, that I
license,
get. Yeah, that I
yeah, a per
understand.
license seems a little
For different
egregious.
people on the licenses, because a bank has to know beneficial ownership as part of the Bank Secrecy Act. They need to understand exactly who is on each license, what percentage of ownership. So if it's broken down that way, that might be one reason why
Okay.
they look at it.
Yeah, and there's this weird area. I have a client that's going through it now. They were researching banks, but they didn't have the license yet, right? They get awarded the state license, but yet the city license, you really don't get the city license, the local municipality. You don't get awarded that license until you're absolutely ready to open
God,
doors, until you've passed all your building inspections. And then when you're absolutely ready, they come in and check you before you get operational. So you're hanging in limbo where you don't have a
no.
bank account yet. Yeah, so any tips or anything that you guys can think of that could be helpful for a cannabis operator?
Yeah, I would say if you're a cannabis operator, seek a bank or a credit union that, like if you're a dispensary, choose somebody who knows dispensary operations. It'll make it easier for you. They already know what they need to do. If you're the only dispensary or grow that they're banking, which I would doubt, but just that they have expertise in your business line. I also say that you get a feeling like they actually want to bank your business. I think people are conflicted. Even people working in banks, they may be anti-cannabis, pro-cannabis, somebody who really wants your business, who's proud to have you and wants to help your company grow. Those are the types of things that we tell CRBs to look for. And our members understand that they're representing this industry and they feel responsible for their customers and their clients and their success.
And
That's very
I,
helpful. Mike, go ahead.
I would add one of the aspects. We did a national survey a couple of years ago of the attitudes of bankers, what they're experiencing, and this was admittedly a little bit before the industry even got to the point of maturing to where it is today. And we said for customers that you see, CRBs that you see coming into your branch, if they bank somewhere else, what's the main reason that they gave for shifting their primary institution to you, presumably? And the answers that the bankers gave, almost without exception, besides fees are always high on the list. You'll have lower fees at this bank than I was paying. But more than fees, what they said is interest and knowledge of the industry. And we've always said years ago, I was in banking, I had to learn the auto industry because I was in flooring loans. A lot of times banks will market very specialized loans and businesses because they like it, because their C-suite or their lenders or their officers have an interest in it. And that makes it a lot more comfortable for businesses to go there. So we always encourage banks, if you're going to be serious about this, put people on your front desk in those markets where you've got greatest demand. And they're going to likely be younger people. They're going to likely understand the terminology. They've been in dispensaries. They've bought from dispensaries, presumably.
Yeah.
Obviously, there's fine lines with employment on that one. But the bottom line is they're people that the dispensary managers and owners might see themselves in. If it's someone my age and I'm sitting here trying to have a conversation besides being in the business, they're more likely not to see me as being very empathetic to their struggles, to their financial
Yeah.
challenges. So we're telling bankers, get in there with people that will attract it. But we also realize there's a lot of banks out there that are just dipping their toe in the water. They're not looking to make this a big line of business.
Yeah.
But we
That's
really
true.
say you really want to have a front facing person who is at least excited and doesn't wrinkle up their nose when the person walks in saying, you smell like crap. We really want people who are excited about this to be the face of this line of business with the bank.
Yeah. And wrapping up, I have one last question. You both can chime in on this is how can smaller operators or these new operators coming in these brand new emerging markets, or maybe we have got an existing operator whose bank is closed down or they're looking to leave their bank and find a new one. So how can they prepare themselves to meet the banking compliance requirements? What kind of things can they work on?
I would say that with banks and credit unions, our members always tell us we lead with a culture of compliance. A banker's main goal is compliance. So if you're an operator coming in, take compliance seriously, and you and your banker are going to be simpatico if you do that. If you're coming in and saying, I've got my licenses, I've got all my ducks in a row, or you come in and saying, I'm thinking about doing this, can I talk to someone first? What do I need? What do you require? What are your requirements for opening an account? So knowing what the expectation is, and then because a bank will not bank you if you don't have your ducks in a row. And I think banks and credit unions, they need to be thanked for making sure that the cannabis operators are staying compliant. That really, by default, it falls on them. They're the ones that are checking all of the checklists and dotting all the I's and crossing all the T's. So if you're coming in saying, I want to be compliant, I think I am, help me, that's going to go a long way.
That was really helpful. I like that. Like they should call every bank and say, what are the requirements? What are the things I need to prepare in
Yeah,
order to
get
bank with
someone
you?
excited about you before you even start to open an account.
Go ahead, Mike.
And we're education. Obviously, I'd be remiss if I didn't say that the association is dedicated to educating both sides of the abyss. And to that end, I would encourage anyone listening, especially in the cannabis industry, to do your homework, get educated. We have our book, on Cannabis Banking. See over my shoulder there.
Please tell me where people can get that, because that was going to be my next thing, is to let people
So,
know where they can buy this book, by the way, so we can plug the book a little bit here.
so two things we'd love to plug, and I think it's relevant to your last question there, Jenny, and that is education comes in a lot of forms. We produced this book early this year from Wiley Publishers. So, their standards are high. It's an educational reference textbook that covers all aspects. It doesn't mean it's going to be painless, but the more you understand the procedures that you're going to face, the less onerous they're going to appear. And so while we've started as a business focusing in on the financial institution side, our goal is to educate both sides. And that's why the second piece, which you're aware of, is we're doing a symposium in July here in New Mexico, July 30th and 31st. And the people invited are both financial institutions and cannabis businesses, because the information is going to be exactly related to what we've been talking about today, the types of things that dispensary operators and bankers need to know to survive in this business. Educate is my biggest recommendation to new market entrants. And it's not rocket science. There's a lot of videos out there. We offer training, people offer training. But if they go into a bank and they really don't know what to expect, they're not going to find that experience to be particularly enjoyable.
Yeah, I'm excited for the Cannabis Banking Symposium. I'm going to be out there. I'm fortunate enough to have 4 speaking tracks. So if you want to come out to New Mexico and meet me in person, and I think everyone should try to attend this event. And also the Cannabis Banking book, for those who are listening, you can find that on Amazon.com.
Mostly on the online outlets that you expect,
Yeah.
but it's out there and
And
really
it's an
for everyone.
audiobook too,
And it's
which is
audio downloadable.
really funny.
Oh, yeah. I really appreciate you guys for joining me. Thanks again, Mike and Erin, for coming on the podcast. I'll actually post information on my YouTube channel about your book, your website, and as well, people can go to my website to learn about the Cannabis Banking Symposium. I'll have information on my homepage, so feel free to check it out. And then if you're interested in streaming this podcast, Under the Microscope is on Spotify, Apple, Amazon Music, Pandora, and iHeartRadio. Also, you can check out my YouTube channel, which is Under the Microscope with Jenny. Thanks again to all of our listeners. I hope this was a really good episode for those who are interested in learning more about cannabis banking. Thanks again for joining us today.
Thanks, Jenny.
Great. Thank you, Jenny.